What's up, guys? Welcome back to the channel. Thanks for tuning in. Today we are going to talk about the Wycoff Distribution / Wycoff Accumulation. So in my opinion, right now we are in the Wycoff Distribution phase. We've already had the Wycoff Accumulation. If you don't know what that is, well, in my opinion, this is why Bitcoin just took a massive sell-off. But guys, stay tuned for the video. I really think you guys will like what you see in today's video. If you guys are new to the channel, welcome to Drake on Digital. If you aren't on this channel, you're getting left behind. And if you enjoy any of this content, smash up the like, subscribe to the channel, hit that bell notification. Without further ado, let's go ahead and get into it. What is the Wycoff Distribution? Well, first off, guys, this no-brainer is made from a guy named Wycoff, Richard D. Wycoff. Basically, why this guy created this solution is because in the 1920s/30s, he was just tired of seeing the quote-unquote whales, or I guess you can say hedge funds and whatnot, the wolves of Wall Street, just basically wrecking everyone. All these guys would long on positions because they think it would explode, or they would short positions because they think it would tank. But these guys were playing people like a fiddle. And I'll show you guys exactly what they're doing and what you guys need to watch out for, especially coming up in this BTC market. Be careful, guys. You can lose your shirts or you can put on a sweater. Two things can happen. Sweater's a good thing, right? All right, so there's 5 different steps in a Wycoff distribution / accumulation. First, you need to determine the position. The Wycoff distribution is mainly for a stock that is pretty popular, or a, I guess you can say, an asset that is popular. So like this happens in gold, silver. It can even happen with Tesla. It happens with Bitcoin, possibly even Ethereum. It's a big enough asset class. So this is typically for your bigger asset classes because these are the ones that the investors are getting. Second is you are needing to select stocks in harmony with the trend. So you don't want to buy or use this Wycoff distribution phase. We're going to talk about it with Bitcoin, but I'm just telling you, like, analyzing in the future. If you guys don't want to hear this part, just skip like 2 minutes down the video and you'll probably find where we're starting to talk about Bitcoin. But anyways, for the stocks that you're going to be selecting, you want to do it with a trend. Trend's your friend. So if, like, let's give an example of gold and silver is just getting wrecked. Well, it's probably not best to use this for it, or some like random penny stock. No, it doesn't work the same like that. This is more so for something that is a large asset class that has institutional demand in it. Because if there aren't any whales in it, well, you aren't going to have Wycoff distribution. So keep that in mind, guys. Third is you're going to select stocks with a cause. So you're going to want to look for, I don't know why they call it a cause, but these are ones that you notice these trends going on. Like this is a Wycoff distribution trend right here. And I'll explain it to you guys in the video so you guys can see it. And then determine the stock's readiness to move. So you guys have to use the Wycoff distribution and figure out, oh, okay, is it ready to move? Is it ready to go down? You have to analyze it with the chart that they have, and I'll show you an example of it later in this video. And guys, as always, it's not 100%, so you may look at this and it analyzes and matches up with the charts, but again, it's never guaranteed. This is just like an overview of what it could possibly be. And again, guys, if you are buying and holding for the long term, this is just white noise for you. So keep that in mind. So what is the Wycoff's composite man? So basically the theory is in the markets, it's not just a bunch of investors or people distributing funds or buying different currencies or buying different assets. No, the theory is that all of these guys team up together and they work together and they construe together and coordinate to dump the market, time the market, pop the market, and basically play games with everyone. And there are huge companies that do this. A good example is JP Morgan. They've been doing it for hundreds of years, or no, decades of years? Yeah, that's 10 years, yeah. They've been doing it for a long time, since the early 1900s. What they've been doing is shorting silver, longing silver, just playing games with the silver market. It is the most manipulated market you can imagine. Basically, the composite man is saying it's just one person that plans, executes, and concludes his campaign. So basically, all of his campaigns are coordinated with a group of people as if it were one. A good example of this is Wall Street Bets with GameStop. So here is the price cycle. This is a quick overview. We aren't really going to go into this. Let's just go ahead and get later into this video. I'll leave a link in the description below so you guys can see it. So first off is the Wycoff Accumulation. I'm not sure if you guys can see this, so I'll zoom it out. Or whoa, what just happens? I don't know, guys. Technical difficulties. Let's zoom out. All right, so here's the accumulation. So this is in a bear market. So right now we're in a bull market. So right now is the what? Wyckoff Distribution, because they're distributing Bitcoin to us. Because, yeah, we're the small holders. No offense if you guys are whales out there. Good for you if you're a whale. But in my opinion, whales are considered 1,000 Bitcoins and up. So first you have phase A. So this is in the downturn, and you finally find some consolidation. This is where they are picking up and accumulating. So you guys can see kind of how the charts go. You guys can, typically when you see a chart that just bounces around like this, let me show you guys an example. This guy, he actually called it the complete opposite. He thought this was an accumulation. He made a very tactical error. As you guys can see, this is in 7,000 to about 4,000. But if you look before, Bitcoin was actually priced higher. So this would be considered a bear market. But hey, he called it 100% that it was a Wyckoff event. He did not say it was a Wyckoff accumulation phase, which you should have said a accumulation. But hey, it's okay. But you guys can see kind of how this chart runs out. You can see we have the bear market, then we have a bunch of consolidation. Guys, this was in March 2020. So this is when we had the massive sell-off all the way to it was like 3,000 something on some exchanges. And you can see we basically just bounced around, and then we started the accumulation phase. If you guys can see in this black line, this is the accumulation of Bitcoin. You guys can see the different phases. You have the PSY, the BC, the ST, and the SOW phases. And I'll explain each of those. And let me go ahead and give you guys the definitions now. So PS is the preliminary support. So this is basically going to be where the most buying begins. As you can see on this chart over here, you have preliminary support. This is going to be the initial where they start the buying. This is where a bunch of buying happens. And as you can see, this is probably around here, coming down to here. That's why you see a crazy amount of volume. Then you have next, which is your selling climax. So this is when all of the selling pressure is just a quick whoosh, washout. So this is when you have all of the longs liquidated, all of the shorts, well, not the shorts got their junk, but all of the longs liquidated. This is when it's fresh spring rain, it washes away all the pollen, all the garbage, and now you have a fresh, clean slate. So this is the selling climax. This is when this is basically going to be the lowest point, or just about the lowest point. And then you have the automatic rally, which obviously after we already saw this, that's in everything. Whenever it dumps, it always pumps after, unless there's something wrong. But Bitcoin is just a regular asset. It doesn't have like rug pulls and whatnot. And it always rallies because there's always going to be traders who are like, whoa, it was trading at $4 billion and now it's only $4. Let's buy some. And then you have the secondary test. So this is the pump, then it tests, it beats the test, and now it goes back up. And then you have your resistance line. So this was initially at the preliminary support. So it bounces back down, and now we are back into the secondary test. So this is going to go a little bit lower than your selling climax in some cases, or some cases it may test it and bounce back off. But hey, you guys can see it's a small percentage. You can be safe than sorry, or you can risk it, not risk it, but try to buy the super dip, but hey, it is what it is. We'll see what happens. And it bounces back. And next, you're going to be having the next trend line, which is going to be the two different resistance lines that you're going to be battling. typically you can map these out with the Fibonacci trends. So as you guys can see here, it came back up, it bounced down, came back up, retested, and they were thinking, oh, it's going to go back down. And they came into this phase, which is the SOS phase, the sign of strength. So this is where it bounces down, bounces up, bounces down, bounces up. So let me show you guys, bounces down. You have the consolidation. So these zigzags like, oh man, we're going to get x-rayed to death. And then it goes wabam and takes off. So that is where you want to see it. The consolidation, higher highs, lower lows, higher highs, lower lows. So as you guys can see, the higher, it's a higher high, then it's a lower low, but then it's a lower high and a lower low. So basically we're building a bull flag in this scenario because we're in a bull upward trend. However, it is a overall bearish. So this can either break down or up. That's why I'm saying this is not foolproof. In this scenario, it actually broke up. So guys, and if you want to be safe, or more safe than sorry, you can get that confirmation like buying it up here. But not financial advice, that's just what I see. So that's the accumulation phase. So this guy thought, oh, okay, well, it's definitely after phase D, and then it's going to go to phase E and crash. As you guys can see, that was not the case. It actually accumulated down, consolidate, and it stuck out to phase E, and the charts paused, but you guys know the rest of the story. This was around 6,800. This was on April 20th. And if you don't know the rest of the story, just look at the price of Bitcoin. It went as high as like 65 G's. So it literally made like a 10x from this point. So that was one of the Wycoff accumulation phases, in my opinion. So now we got the accumulation phase down pat. Let's go over the distribution phase. This is my opinion, what we are in right now. Again, guys, this is not financial advice. This is just my opinion, just what my eyes see. If your eyes see it, great. If not, hey, it is what it is. These are some of the phases we didn't really talk about, but we'll go ahead and talk about them on this one as well. Just so you guys can see how this chart goes, I went ahead and had the map overlaid so you guys can see the Wyckoff distribution occurring. So you guys can see here are the different phases, and this is mapped out almost to a T to see what will happen. So right now we're at a price of 39,721. So we're bouncing around. There's a little bit of white noise, but we should hit some resistance if this chart is right, around 44,000, maybe 43,500. Again, time will tell. We'll see what happens. But let me go ahead and show you guys the phases just so you guys can see it. So here we have a high, high, low, low, higher high, lower low, higher high, but now we got a newer low. Something's off. Something happened. Okay, so what happened here? So we're going to show these different phases. This is the Wyckoff distribution phase. So this is when the investors are selling. So we're going to have our preliminary support, which is going to be around this phase area where you see a lot of the volume picking up. As you guys can see down here, a lot of the volume picks up around this phase, or I guess you can say around here. This is going to be our preliminary support line. And you can see we're popping up. This is around phase A. So now this is when people are starting to buy. Tesla's saying, oh, we're going to the moon. We just packed our bags. Let's go and buy our junk. And you guys can see usually the news trades around this junk. And the reason why it's kind of like seems like that is because the big investors or the big whales are paying for those news articles and paying for that news to come out. So keep that in mind, guys. Even though it's cryptocurrency, it's manipulated, guys. It just is. There's too much money out there to not manipulate it, and crypto markets are just puny. So next you're going to have the buying climax. This is at this point, and this is about 55,000. This is when everyone's like, oh, this is going to the moon. This is the best junk ever. Oh, snap, we're going to the Mars. Bitcoin everywhere. Bitcoin bananas. Okay. So now this is the point where it's like nuts and ham. This is crazy. So then we get our first sell-off. Now people like their buttholes sink up and they're like, snap, what just happened? Now we're gonna have the first the first test. And people are like, the people sitting on the sidelines are like, snap, it's a good buying opportunity. Let's get it. So they buy it, pumps it all the way up. Now they're feeling so euphoric. They're feeling good. They're like, yes, 61 G's. This is so awesome. Let's ride it to the moon. Buttholes. They get tight. They're like, snap. We're going back down. It's 53,000. People sell their Bitcoins. They sell it out. The weak hands sell. And then the strong hands pick it up. Buy some more. Sell it back down. Guys, I'm manipulating this. You guys can see it. This is the distribution phase. Because if they just sold it all at once, it'll tank the price. That's what happens. And they will do it on purpose. They will tank the price. And when they tank the price, they buy more. Because they know all they got to do is sell some more and tank the price, buy it at a lower price, bring the price back up, sell it. If you guys don't understand, just look at the recent texts from Elon, or the Twitters from Elon Musk. I mean, I'm not saying he's that type of guy or if he's doing it or not. I don't know. We'll see what happens. But one day he was like, Bitcoin's the best. The next he was like, oh, Dogecoin's the best. Bitcoin's trash. Oh, Bitcoin is horrible. It's horrible for the environment. Oh, we're not accepting Bitcoin for Tesla anymore. And then he's like, oh, snap. We got diamond hands. Wait, I thought you sent a tweet like 2 days ago saying, yeah, that would be pretty crazy if investors heard that we sold. It was just like thing after thing. I mean, it's like he was manipulating the market and saying, hey, you can make a bunch of money doing it. I'm not saying he did or not, but just look at the results, guys. He obviously manipulated it, but hey, we'll see. You guys can see all these volume spikes here. These are very important. So these are both buying and selling actions. When you have lots of volume, that is a signal for either a secondary test, an automatic reaction, buying climaxes, or preliminary supplies. So all the different volume sections that you see, those are important sections to see, and you guys will see them on the chart below as we go. If you guys are on your phone, yeah, I can't really zoom in for you. I'm sorry. It's zoomed in enough. And we'll go on the chart just showing you guys in the future what to look for as well. So stay tuned for the rest of the video. Or you can just fast forward a couple minutes if you don't care about this. But it is something you should learn how to fish instead of, getting fish. So you guys can see we're at this portion. We come down to here. This is where I guess you can say, quote unquote, is phase D. This is when the LPSY, last point of supply. So this is basically when they flood the market, see what's going to happen, and there's weak demand because everyone's already buying up here, and then they're like, snap, we're selling down here. They're buying up here, and now, snap, they're selling down here. So they're like, forget it. Go ahead. Send what you got. So what happens is, this was the UTAD, which is the upthrust after the distribution. So this is after they sold a big portion of it, and they got most of the people to buy in. And now, or not a big portion, but they sold a lot of it, and they got a lot of people to buy in. So it's like, snap, now we're way up here. So this is where they start shorting. And you can find different, I guess you can say, numbers to look for. As you guys can see, this was just about an even number, just right over it, about 65,000. And you can also use Fibonacci trend lines as well. If you don't know what it is, it's these colorful things. You can play around with it, and they really are like golden numbers to look for. But they begin shorting it. So when they short it, they go ahead and buy up their shorts right here, recover them, and then they can accumulate more Bitcoin at this point as well and do the same exact cycle over and over again. So now we're into the LPSY, which is the last point of supply. It shows there's weak demand, so they're like, man, all right, let's flush them out. So the big guys are like, we're going to flush them out. So this is where we got the big drop, guys. We dropped down to like, it's not even showing up on this chart. I got to go on the 1 month chart. But this is where we dropped down, way down. Right here, you guys can see it on the big chart. This is where we dropped down to about, it was actually 29,000 on some exchanges. So this is where we are getting the first dip, maybe the second dip. So now we're going to get a pop back like we have, and we're in this portion, the LPSY. So LPSY is the last point of supply. We have weak demand right now. There's coin, or they're selling on the market right now, but it's weak. It did pop pretty well But guys, if you look at the overall chart, we were at 65 and now we're at 40. We're battling the 40 mark right now. So let me go ahead and show you guys the chart just so you guys can see where we're at with it drawn out right on top. So our next numbers we need to look for is around 44,000. Just to be on the safe side, I'd probably do like 43.8. That is just on the safe side, guys. This is not financial advice. It could go over it. It could go below it. It may not even touch it. I don't know. We'll see. I'm just showing you guys the Wyckoff distribution phases. So once that goes to here, then we're going to get another sell-off. So this is going to go even lower than before. So people are saying it's going to be about 24,000. Could possibly even test 20,000 because look, we got a lot of support right here. Actually, this is the 23,000 support. We got a lot of support around 20,000. So it could test the 23,000. That could be a possibility. I think it may even go a little bit lower. We might get some wicks. We'll see what happens. If you guys don't think so, well, you guys probably weren't expecting it to drop to 29 so quick, and it happened. Guys, it doesn't hurt. It doesn't hurt to be more safe than sorry. So keep that in mind, guys. This is basically going to be the last drop. I don't know. We'll see what happens. And then we go back into the Wycoff accumulation phase. If you don't know what that is, just rewind the video, play it again. The cycle starts all over again. In my opinion, right now, I think we are in phase D/E. We're getting ready to hit phase E. That is where the big shakeout happens. I don't know. We may have already had the big shakeout. Time will tell. We'll see what happens. But again, there was a brutal correction. Hopefully you guys got some good buying opportunities, not financial advice. But again, just so you guys can see it again, here's the accumulation. If you guys enjoyed this video, well, actually, let's go ahead and show you guys the next numbers you guys want to see. So we should, I don't know, we'll see what happens. Dip down, we'll just call it 20 to 25,000. Pop back up to about 46 to 44,000. Get a nice retest. And this, the ST, what does ST mean, guys? The secondary test. This is where we're going to test back around our preliminary support. So the PS is the preliminary support. As you guys can see, preliminary support. This is where the buying started beginning. A lot of people were like, buy the dip. This is your dip. A lot of people started buying here. And this is the secondary buying opportunity that people bought in. So secondary test, it's going to test around 34,000, maybe 33. Could be even as high as 35. I don't know. We'll see what happens. We're already at 41. If you guys haven't already bought a bag or you didn't buy in and you do want to buy in, maybe we'll get a retest and you can buy in again. Or, hey, like I said, look, you still have this portion right here. Guys, there's nothing wrong with sitting on the sidelines and making sure or checking to verify and see what it does. A lot of traders, what they'll do is wait for the easiest trade. So like buying after consolidation, and after they see a major uptrend, that's when they buy. So a lot of people will automatically say, okay, no, I'm not going to wait to buy until this phase, which is phase A. There's the least risk in phase A. Like the least risk was to buy right after Bitcoin busted its all-time high. Or not right after, but going by the halving ratios and looking at the charts after looking at it in the past, your least risk was buying it on the massive dip when it went to 3,000. That's obvious there. But trend is usually your friend. So when it popped over that 20, that could have been a good buying opportunity. You'd be sitting pretty at 60, wouldn't you? So again, not financial advice, guys, but just giving you guys thoughts. These are just different options you got to look at in the charts, in the markets. I know a lot of people, it's true. You can't know 100% what Bitcoin's going to do or what a cryptocurrency is going to do or what the market's going to do. But you can figure out what's the least risky, the most risky, what the thoughts are, what it possibly will do. I don't know. We'll see what happens. So now you guys got that portion, and then obviously you guys can see after the accumulation phase happens, they start it all over and they have the distribution. So look, pumpage. So I hope you guys enjoyed that video. I hope it brought I hope I was able to bring some value to you guys. I'll leave a link in the description below to this article. If I forget to do it, just leave it in the comments. I'll leave a link in the description below as well, just so I don't forget. I'll go ahead and send myself a message. But If you guys enjoyed this video, smash with the like, subscribe to the channel, hit that bell notification. That way you guys are notified every time we make a new one. And guys, if you want to support the channel and get paid to do it, there's some links in the description below. You get paid, I get paid. It's a win-win. And we're going to leave you guys with a wisdom one-liner. Proverbs chapter 27, verses 10. Do not forsake your friend or a family of your friend, and do not go to your relative's house when disaster strikes you. Better a neighbor nearby than a relative far away. Well, guys, two things. First, be nice to your neighbors. Second, make friends. Don't be shy. Thanks for tuning in. Thanks for watching, guys. If you guys are new to the channel, go ahead and hit that like and subscribe button and hit that bell notification. That way you guys can be ahead of the game every time we make a new video. If you guys are new to cryptocurrency, don't know where to get started, don't know what to invest in, well, participate in the triple threat. The first thing, set up a Celsius account. This is for your savings. This is where you're going to store your cryptocurrency and you can earn interest. It can be up to 5%, 6%, 10%, and they even have some as high as 17%. Here's a referral link. Use this referral link in order to get 20 bucks in free Bitcoin. Part 2 of the triple threat is to get a crypto.com. Crypto.com account is one of the best places, especially for a beginner, to buy cryptocurrencies, or smaller altcoins. So now you have a savings account. Now you need to get a cryptocurrency wallet that allows you to buy those smaller altcoins like your Engine coin, your Raven coin, just like smaller alts, so you guys can participate in those big plays. My referral code is down here. If you use this, you'll get 25 bucks free. And the next one is Voyager. Voyager is awesome. There's a list of different cryptocurrencies you can use. What I like about Voyager in particular is you can actually make your next level up in buying cryptocurrencies. You can actually buy Bitcoin with a limit order. So you just hit buy Bitcoin, hit limit, and you type in how much you want. Boom, you're off to the races. So you don't have to watch it and make sure it's a good buy-in. Here's a referral code you guys can use to get some free cryptocurrency. This will allow you to get $25 for free. Can't beat free. And then obviously this is just a fun one, so you can get free cryptocurrency, is going on Lolly. You get a daily stack. All you do is you tap the treasure chest and you get free sats. And it's literally free. One of the days I literally got 20 bucks in free Bitcoin. Look, 101,000 sats. Pretty cool.